I've often heard you say this Larry Summers quote that Japan is a hospital, Europe is a museum, and China is a jail. Right. So where does one invest?
So it's on this generation really of how we build up, because historically we've been processors for rest of the world. Like our service companies will make work. You were working in Meta, for example. Infosys may be doing work for Meta, but Infosys doesn't own the platform, and Infosys doesn't own the underlying IP and the protocols on which these platforms are built. And therefore, like one Microsoft makes more money than the entire Indian IT pack put together.
Has your relationship with money, power, and fame changed after all the inner work that you did?
Number one, I think we tend to be born with some sanskars of our last line, and I can now reflect back and say I always knew I was going to do well in life, and I had this self-assurance even when our business was going downhill. I didn't have fear.
You were able to become like the household name in terms of a banker that everyone trusted, be it the Birlas, Rahejas, Infosys. How did you build that level of trust with all these people?
Honestly, credit must go to the founders of Enam. Like I've always said, they were the architects. I was only the interior designer. So they built the house, and the cultures, values, and what I call the benefit of good sangat, good company.
Ramesh Bhai and Vallabh Bhai, what were some of the core principles or wisdom that you imbibed?
Investing, everyone says I'm Warren Buffett, but there was also a Peter Lynch, and each person comes with his or her own style. And if you can't be original, you're gonna suffer.
Hello and welcome everyone to the India Opportunity Show. Our guest today is Manish Chokhani, one of the most respected voices in the Indian public markets ecosystem. Manish is not only a market veteran, but also a rare thinker who blends investment wisdom with timeless life principles. He was the MD and CEO of Enam Securities, which was sold to Access Capital for over $400 million. After Enam's merger with Access, he served as the MD of Access Capital. What you'll really appreciate in this conversation is Manish's ability to zoom out and be a global thinker and investor. I really enjoyed all the snippets of spirituality that he blended with timeless investing wisdom. Hope you enjoy watching as well. Hello Manish, welcome to the India Opportunity Show. Thank you for taking the time to be with me here today.
Thanks for having me, Shrishti.
Honestly, I have to tell you, this is such a dream come true moment for me to be hosting you today. I've always watched you on TV, and just to be with you here in person is a dream come true.
No, really kind of you, and I think you're my son's age, so I hope we get those kind of audiences listening in as well.
Absolutely. There's so much wisdom that people can learn from you, and today we'll dive into that and a lot more. But Manish, even after accomplishing so much, when my team reached out to you, your words were that anything that we can do to help our fellow countrymen in India's wealth creation journey, that is what you wanted to contribute towards. Sure. And I thought that was a great starting point even for this conversation, because you actually personally lived this message. What do you think India's wealth creation journey will look like over the next 15-20 years?
Wow, good question. So, look, Shrishti, we are average 28, 29-year-old. You represent the young India. And if I look back at my sort of 35-year journey, you see normally the Indian industry makes about a 15% type ROI, which means the index itself doubles every 5 years. And you go 4 times in 10 years, and therefore it could be 16 times in the next 20. Even if we don't hit that, just on pure math, 90% of your wealth creation lies ahead of you in the journey. So all of you are blessed because you came into existence when, like when I came from my dad's generation, they at the end of their life, they had a bungalow and a car. We guys probably worked hard and we started getting a car while the kids were still, being born and so on. And you guys are coming in already with all the basic needs fulfilled. So you can really aim for the moon and the stars. And I think the best period of India, therefore, lies ahead of us as we climb up this League of Nations and hopefully make an impact on the whole world.
Yeah, I think it's so fascinating that all of you legends constantly say that India's next decade is going to be the best one. Yeah. And where do you think in terms of, just from an Indian investor's perspective, because I've often heard you say this Larry Summers quote that Japan is a hospital, Europe is a museum, and China is a jail. Right. So where does one invest? How would you suggest Indian investors invest in today's day?
No, look, Indian investors can't take it for granted that we are going to arrive. I also say that Argentina was the richest country like 100, 150 years ago, and then they blew their opportunity. So it's on this generation really of how we build up. Yeah. Because historically, we've been processors for rest of the world. Like our service companies will make, work. You were working in Meta, for example. Infosys may be doing work for Meta. But Infosys doesn't own the platform.
Yeah.
And Infosys doesn't own the underlying IP and the protocols on which these platforms are built. And therefore, like one Microsoft makes more money than the entire Indian IT pack put together.
Yeah.
So unless we go up that value chain in the coming 10, 15 years, which we will, which is what China has demonstrated, that they've taken ownership of all these protocols and the platforms. I think that's really, where we should be heading. That's one. Number two, I think in the next couple of years, we'll be the third largest economy behind US and China.
Yeah.
But we are still a very inward looking and a closed economy. So both as a business person and also as an investor, if you're not aware of what's going on in the world and you're not addressing either a business opportunity elsewhere, or you're not starting to invest outside in the world so your horizons expand, you're doing yourself a disservice. So surely India will be a large part of global indices, but it won't be like US with 70% of the world market cap. It's not like it's the only market in the world, right? People do invest and they do grow their businesses outside the US as well. Like you yourself worked in Meta. If they hadn't come to India and they hadn't found you there and they wouldn't have built up their business over here, they would have done a disservice to themselves. And today, I think the largest user base is in India.
Yeah.
So you need a lot more aspiration and a lot more ambition to come out from India. And that's what I'm really excited about over the next 10, 15 years.
And you've personally bagged startups as well, and you do publicly listed companies. Sure. What do you think we don't get right? Why do we not have examples that have taken over the globe?
Yeah, I think it's a matter of time as well. Because, look, we came out of great deprivation after independence. So to just meet our basic needs, your generation won't even know we were having to import food at some point. And we would be beholden to the rest of the world. From there to being the food granary, we didn't make enough of our own steel. We never had a car company until Maruti really came and started building volume.
Yeah.
So we've come out of a lot, and it's like a step process that you build your balance sheet, you build your capabilities, you build your confidence. And the analogy I gave is of the Indian cricket team, that till the late 70s, if they went out and played a cricket match abroad, it was a big deal.
Yeah.
We got a turning point in 83 when we won the World Cup, but it was considered a one-off, that can you be a regular world beater? And that only happened in the next generation when the Sachins came. Even though the Gavaskars and the Kapil Devs had great talent, they weren't world beaters. They got their one-off in 83 and 85. But the Indian team really came into its own in this Sachin, Dravid and other era. And then you needed a small town Dhoni to come and say that, we can then go and smash the rest of the world.
Yeah.
And today we dominate the, cricket field. So it's that sort of evolution will happen to Indian business and industry as well.
So we are waiting for our Sachins and Dhonis to come.
Well, the Sachins are there. We need the Dhonis to come and be the world leaders, because Sachin was a great individual player. He wasn't the team captain. So we need the Dhoni to come, and I'm sure they'll come from some small town.
Do you think any of these new age companies that you see getting listed now? There are so many companies, private startups that have gone public as well. Yeah. Do you see any of those examples?
They're all great, entrepreneurs, and they've built great businesses. But it's still, what I still think we are doing is cut, copy, paste for the types you're mentioning, which are coming to market. So, Flipkart would have had copied an Amazon over there, an Ola would have copied an Uber over there, Oyo would have copied an Airbnb over there, and so on. Zomato already got Meituan and others, for example, in China doing that. So it's great what they're doing, but these are, like I said, we don't own the underlying IP and protocol or the platform.
Yeah.
For example, we build the India stack. It's great what the UPI has done. But what have we done on top of it? Because already it's now Google Pay and others. They control that platform. So if you don't take the whole value stack, you won't get the complete, profit pool coming into your pocket. And we are happy we've built, for example, the previous generation built the IT services company. And $250 billion worth of Indian IT exports is equal to oil from Saudi Arabia in terms of absolute number of foreign exchange earning. Similarly, the Indian pharmaceutical industry built a large generics business. But in terms of absolute profit, like I said, one Microsoft makes more money than the whole Indian IT sector put together.
Yeah.
So it's that sort of thinking which I think, because there's now adequate capital available in India through the VC world, unfortunately, a lot of it still comes from overseas. But I think that's available. B, we need our kids to get a lot more exposed to the world.
Yeah.
And I remember even in the 90s, I had backed a company called Ramco Systems, which was taking on SAP back in the day. And they had the first client-server architecture-based ERP, whereas SAP was mainframe. But they lost out because they didn't have the feature richness, which you need, or the UX experience which ultimately the customers want in those markets, and those investments were not made. Same way, Indian branding companies, if you take the Indian brands, how much have they traveled out? You'll hear of a Bajaj, but it'll be going into a Nigeria or a Sri Lanka or an Indonesia will have TVS, or a Marico will go into Bangladesh, or a Godrej will go into some other emerging markets, because the wherewithal to go and build those brands and invest for the long term may not yet be there. So I think that's number one. Number two, this ease of doing business in India is, I think, a bugbear I hear from most people.
Yeah.
So there was a period where a lot of our startups went overseas to set up. And then a number of them have flipped back, but it's not flipped back for business reasons. They're flipped back because the Indian market seems to giving them valuation because they are so rare.
Yeah.
And that's why we call them unicorns, because it's a rare mythical creature. But other than valuation, this is not the market to go and test yourself. Like the IPL became a global thing because you played with the best in the world. And when you beat them there, then you realize I can take on these chaps elsewhere in the world. So you need some version of that, I guess, to happen over here.
Yeah, you're so right. Because, in the private market world where I've been an active investor, earlier the conversations used to be that go and register yourselves in Delaware,
Abroad,
right? And that was well-meaning advice that every VC would tell you. But now the conversations have changed because people are flipping their structures or setting up in Mauritius or Cayman Islands, etc. Because people have realized that listing in the US for Indian companies, you get lost in the
absolutely, and
noise,
you're too
right?
tiny to get noticed. And here the valuations are, frankly, you get surprised on the upside over here.
Yeah, but because you touched upon pharma and IT sectors, you've been able to predict trends ahead of the curve, and you were talking about banks and financials coming back into the picture, and pharma and IT getting affected, and we're seeing all those cycles play out now. A, what do you think of the cycles going forward? But B, also, how do you identify these cycles at large?
Well, number one is we have to recognize their cycles, because we all come out of financial background and we all grew up on Excel spreadsheets, and the easiest thing was to take a line and draw it for the next 5 years and 10 years, and it went straight. And nature is cyclical. There's nothing linear in the world. You have day and night, and you have a season, 4 seasons in the year. So everything that you observe, even our own life, we go through a life cycle. And so companies have a life cycle, sectors have a life cycle, nations have a life cycle, our world has a life cycle. The way we were discussing before we started the show, the kind of souls coming into this world are coming with different life cycles. So once you play according to the laws of nature, that there is a life cycle, and there are clearly life cycles of economies. And I learned very early from the great Mark Faber. He used to write about life cycles of emerging markets. Then there were also in economic theory, there's the Schumpeterian analysis of where they talked of disruptive trends. Then I also observed post the 1970s Bretton Woods that how every decade you created a bubble once you broke the gold standard.
Yeah.
And you went away from financial assets in one decade to hard assets in another decade. So with all that sort of there at the back of the mind, you can almost see what's coming ahead. Because in some sense, as I'm older, I can say this now, I didn't realize it then. You're kind of in sync with nature. And it's like when you know a person, you can predict that person's nature now. Same way with most other things, you almost have a predictive, intuitive sense about what lies ahead. Like you meet some people, you get a creepy feeling, right? You don't want to meet that person. And with some people, like you feel like you've known each other forever. So there's some things that work. I don't know, it's hard to explain.
I guess some things that align with you naturally
it just
give
align.
you energy.
It's like, and not that I'm saying I'm similar, but it's like asking Sachin, when you see the ball, how do you hit it? I mean, he sees the ball like a football, and we get bowled on the same ball. So I think it's a bit like that. It comes with both your own nature has to be there, and B, you got to just keep at it. Like this Malcolm Gladwell had that lovely book, no? He said 10,000 hours of practice. That's what differentiated the Sachin from the Kambli, who, when they were kids in school, there was a Vinod Kambli who was supposed to be more talented than Sachin. And then his life, he took in another direction, and Sachin stayed very disciplined and kept honing his craft, and look where he reached. So it applies to all of us in all the fields we operate in.
Yeah, absolutely. And we'll dive into the spirituality aspect for sure. But where do you see we are in the cycle? With Trump on Twitter, he comes up comes
Right.
up with some really disturbing stuff
Right.
sometimes, and it's really affecting how people across countries are thinking about decision making or investments in they wanted to if they want to invest in different setting up different ventures, etc. So there's truly globalization is at risk, right? And globalization as we knew it is at risk. So how do you see this geopolitical tension affecting the region
So,
across?
again, great question. And you have to go back in history to realize what we saw in the last 100 years was an exception. The world didn't really have one superpower dictating the rules of the world forever.
Yeah.
And even the rules which came about were actually post the Second World War, where the sort of two big colonial powers, UK and France, were counterweight by the non colonial powers, which were then the US and Russia, to say, let's now set the rules of the world and draw up a kind of a map on the way we want to now rule the world and the way we want rules to operate. And you therefore saw how even the Security Council was created with the big powers then sitting there, and then they grudgingly took in Germany, Japan. India was given a chance to come in, but we, for whatever reason, said let the Asian seat go away to China and so on. But that's one part of it. Then they also designed the world the way the monetary system would work and so on. So it was all rules designed to play to the strength of the West. Now, with the falling of the Berlin Wall and the demise of the Soviet Union, effectively the US was left as the only power in the world. So the era that I've lived through, 1990 to today, just saw a complete explosion of US exceptionalism and the rise of capitalism, which was completely unbridled. Because the era before that, remember, was the Cold War. And you didn't really have a world which could trade freely. And you therefore had a very inflationary world. And dollar printing therefore gave you these bouts of bull markets in the then emerging market of Japan and Taiwan and so on. Yeah. The previous decade was gold and so on. So as these rules have to get overturned because the West has lived beyond their means, their only recourse to every problem that now occurs is let's print more money because we have the ability to do so. And 2008, in my view, marked the end of that period where they used that money printing press to great effect. And they realized the world didn't react. Like India was 40 rupees to the dollar. The yuan was, if I remember correct, it was probably 6 to the dollar. And post that, they printed 3x the dollars which were in existence. Yeah. And yet, oddly, the rupee has gone from 40 to almost 90. The yuan has almost stayed steady. And they use that excess money by keeping the currency stable to go and build hard assets and infrastructure and productive capacities, whereas we went and did, Narega and, basically lost all the money and didn't build up our manufacturing infrastructure at the right time. Yeah. So as this game is now tilting and China has clearly taken control and leadership of the world, they produce probably half of all the world's manufacturing output. They control most of the supply chain for energy, which also we haven't solved this for decades. So as this kind of new world, which is Russia, China, Saudi, saying, why are we playing by the rules set by the US and UK? This world has to change. So this chessboard is changing completely. How it lands and where it lands, we have to see, because if India had gone into bed with the BRICS, this would have become the new G7. But for strange reasons, I still can't understand why China did what it did in Ladakh. If that episode had not happened, BRICS would have already started emerging as the new power center of the world. Yeah. We would probably have already seen the emergence of a new sort of multi-purpose currency bloc. I don't think people as yet will trust Russia and China to be the reserve currency in terms of store of value. Yeah. But they've done with SIPs, which is the counter to the SWIFT trading system, where money transfers are now happening electronically. Yeah. So SIPs is actually like the new UPI of the world in a way. Where SWIFT takes you 3 days to transfer your money, you can do it on SIPs in like pretty much a few seconds. Yeah. So if a currency has both transacting power and a store of value, the transacting power is clearly moving away from the dollar. The store of value we are not finding, and therefore this whole move going to gold, going away to cryptocurrencies and so on is happening. Yeah. But it's also a redesign of the whole geopolitical chessboard in terms of power play. And how India plays in this will determine really how our next 20 years go. Because even in the WTO post 2001, China got all the advantages as US embraced and brought them in. And we were still seen as close to the Soviets
Yeah.
or the Russians at that point. So we were kind of kept out as pariahs. We never had a trade agreement with anyone of significance. So it's only now that you're seeing Europe has reached out, US has reached out. If you get a good trade deal going bilaterally with these economies, India being 3% of world market share, world economy is just terrible.
Yeah.
Historically, India and China used to be a third of the world GDP. China is already well on its path there. India is at least 15, 20 years behind. But if we don't play this game right this time, the way we collapsed when we missed the Industrial Revolution, it's not a given that our rise is inevitable in the next 20 years. If we don't play both this geopolitical game right as well as this new emerging technological game right. So we'll see. I'm optimistic. I live life on that basis. But again, like I said, it's not a given. Let's see how it evolves.
Yeah, absolutely. What you're saying is so true because, we sometimes get trapped in our own echo chambers that India is great, the India opportunity as the show is called, etc. But it's so important to keep updated
Keep
with
a reality
all the,
check.
Yeah, absolutely. But what are other potential risks that you foresee? That
For
what
us,
could derail us from this story?
I think biggest challenge in India is when we think of an idea, we think it's already done. So there's complacency risk in India. It's like our market cap is whatever 4 trillion, and we think we already, look, China has not performed for 10 years. We are so great. Markets are paying for potential, but if you don't deliver to potential, these valuations don't last forever. So I think biggest challenge for us is our feeling of complacency and almost a lack of ambition that can I go and conquer the world if enough people of your generation already feel, we are rich, dad's left me like $1 billion family office, why do I need to go and work anywhere? And more people think like that, and we don't go and build, and we remain kind of a technological, colonial
on the back foot, basically.
On the back foot.
Yeah.
It's not a given. B, the way we have built up our governance systems, it's basically the edifice of the Indian economy is built on the British Raj, which was control. And for better or worse, our bureaucracy may have held the country together, but the amount of rules and regulations you now have to deal with as a business person, you would know. The center, the state, the city, the municipality.
There's so much corruption at every level.
And because when you make so many toll gates, each and every person in that toll gate knows if I delay you, your time has value, his time has no value, and he has no consequences of that.
Yeah.
So unless there's a fundamental reset of our governance, which is possible, like we did the IT system faceless with use of technology. If you did the whole India stack on payments by use of technology, a lot of that also used to be, cases of graft. You have a Digi Yatra, for example, today where you go seamlessly through the airport. So it's not that it can't be done, but unless we use this for governance and most importantly for the judiciary, you got 6 million cases sitting in the courts, in the high courts.
Yeah.
And in India, the process is the punishment. So a lot of the startups who come here to set up for valuation, they eventually get frustrated or they don't, you reach a point and say, who wants to deal with this? Forget about scaling.
Yeah.
That I have enough in my life, I can't fight this battle
I don't want to spend 20 years in the court.
So, 2-3 major stumbling blocks are there. But having said that, the entrepreneur's journey is an odyssey of adventure.
Yeah.
And part of that adventure is dealing with this. And that's why you make margin on how much stress you can take. That's the margin you get. But the challenge still remains that this throttles your ambition because it kills your spirit from time to time. That I did so much and yet this is how I'm being treated.
Yeah.
And we've all, even if I'll go across people in my age group, in our friend circle, all of us at some point have felt that despair that why is, this treatment being meted out to me?
You just wish that it wasn't so hard, right?
And sometimes you go out and do business outside and, you're looking that there must be something more that I need to be compliant with, and you realize there is nothing.
Yeah. And just, when you can take people for their word. For example, in the US, people are so straightforward. They are completely in your face. They will objectively tell you. Versus in India, where it's like,
No, you got to keep follow up, and then follow up.
Yeah.
And it's therefore, it's not an Indian problem because, look, the whole Silicon Valley is being run by Indians.
Yeah.
And now even a lot of political power has come to Indians outside. So it's not a problem with Indians. It's the way we are being governed that I think needs a reboot of some sense. We have the best of the government today compared to what we had. But is it going to take us from here to where we ought to be in the next 20 years? I hopeful that there will be a bigger reboot of this whole thing.
Yeah, absolutely. And the hope is that people like you continue to nurture the next generation of entrepreneurs.
Well, entrepreneurs and also people who govern us,
Yeah.
because a lot of us, like normally anywhere in the world, people of our generation would have already gone into some form of public service. In India, you don't even think of it.
Yeah, like we
Because
don't
who
have
wants
a
to deal with
Doge for
this?
India.
Yeah. But
Yeah.
but anyway, let's
Yeah.
stay optimistic. There's a lot of good things.
Absolutely.
So I don't want to go down
and that is
that
why the
rabbit
show
hole.
is called the India Opportunity.
Absolutely.
But coming to valuations, because you touched upon that, like everyone talks about how the Indian valuations are obviously at a premium compared to what you see in China.
Right.
And when you look at some of these global players, sometimes you often wonder how can you justify the valuations and the premiums that you end up paying in India. What is your mental model for thinking around that?
No, so look, be honest. If your capital was allowed to leave India, we would not have had these valuations, because your capital is trapped over here.
Yeah,
Your-
LRS
your
limit.
LRS is like, I mean, $250,000. How much can you realistically set out? But let's say India had a free tradable currency on the capital account. Business people have all gone, and Tata has acquired a JLR, and Birla has gone and acquired a Novelis, and so on. So people have gone and made bets abroad, but yet not at that scale, which I'm saying India ought to be doing. Even our IT, pharma companies, they could have been a lot larger outside. And the Indian investors, like I don't think are less smart than any of the investors in the world.
Yeah.
And if we had been allowed to invest, imagine what kind of reverse inflow we could have got as we book capital gains abroad and brought them back.
Yeah.
Because it's the Indians who are building all the the great tech companies in the US.
Yeah.
And everyone in our circle knew about Amazon, Google, Microsoft, Nvidia doing well months in advance.
Yeah.
And we would have made tons of money if we had all been allowed to invest much more capital outside India. So if that kind of phenomenon doesn't happen, then I don't know what we are up to. But with this trapped capital, what happens that rarity in India gets disproportionately rewarded.
Yeah.
So if you look at, say, valuations, even in traditional business, I'm not even going into the new age ones because they're still so rare in the listed space, that if you look at today, say a Maruti Suzuki, which is owned 60% by Suzuki, is worth more than the entire market cap of Suzuki, even if you ascribe only that 60% or 70% of its value to Suzuki.
It's same for Airtel and Bharti Airtel.
Yeah,
and
I mean, Bharti, of course, the parent is here, but like even take a Unilever, maybe 60-70% of global Unilever's market cap is India. And these companies are growing in single digits. Even a lot of our, much heralded IT services companies, these are now mature, low single digit growth companies. And they're all trading at, north of 25 multiples. When you look around the world, you would find, many companies like this.
Yeah.
So I think unless this kind of, how shall I say, this frog in the well syndrome changes, we are doing ourselves a disservice. Also, the foreign funds which come into India are not really knowledgeable in the sense that they hear, oh, India is doing well, and money comes into an ETF, and a lot of trade nowadays happens through algorithms.
Yeah.
So as long as the trend continues, the trend keeps continuing until it doesn't. And then when it reverses, it gets very painful. So we are currently enjoying the boom of the last 4-5 years.
Yeah.
But a lot of people don't have memory of the post-2007 bust of emerging markets when BRICS was center stage and China was the center of that bull market, and India had done very well also. We went through a decade of underperformance. Now China came and shot itself in the foot with what Xi Jinping tried to do to Jack Ma and others to just keep them in line.
Yeah.
Otherwise, China would have roared ahead. And in between, actually, the China, Baidu, Alibaba, Tencent, they had become like what the Magnificent Seven were in the US. The Chinese wealth creation was enormous in between. So while the indices never showed it, people made tremendous money in China as well.
Absolutely.
So I just say enjoy it while it lasts, but I don't think you should take these valuations as your birthright and that these will last forever.
Yeah, because a lot of people, especially who got into the markets after COVID in their 20s and 30s, this is pretty much their first cycle that they're experiencing. And that too, not a proper cycle because this is barely a correction.
I know it was pent up and you had a lot of pent up demand also. And we discovered trading on our phones. So it became a pastime as well. Now. So everything's gamified, and which is a good thing. Look, you want Indians to come and be owners of equity.
Yeah.
Because the whole previous generation only went for safety and they had money sitting in fixed deposits, or they used to go and land and park, cash money over there and so on. So this financialization, it's a great thing to happen, but this awareness of cycles, of economies, of markets, and even if the economy grows tenfold in the next 10-15 years, it's not a given that the market has to follow, because we may have already priced a lot of that growth ahead of ourselves. So I would just leave a note of caution on that.
Yeah, absolutely. And one would even say, even the companies which you talk about this rate of change concept, right? I think we can talk about that also, because there is a lot of capital which is being thrown at companies which show high growth. And unfortunately, I feel that is also the reason why a lot of bad actors come into the system, where we've seen so many corporate governance issues being highlighted over the last few weeks, and also I think years. So how does one compensate and balance for that, right? Because it's a very delicate balance. As founders, you have to find opportunity. As investors, you have to find opportunities which have like integrity in place, corporate governance in place. But then on the other side, there's also a lack of investable securities to get yourself into in some ways.
No, well, at one level, the good news is in India, there's a lot of opportunity and there's a lot of assets. It's actually a very broad and diversified market. What's happening is we tend to look at one sector at a time which is doing very well, and then you get FOMO that I'm not participating here. But in every bull or bubble phase, there is also something else which is having a bear phase. And I'll draw the analogy to say the 2000 TMT bubble, where when the TMT bubble bust, it's not like the market died completely, because on the other side, you had all these hard assets and PSUs, which then took off. And you made 20, 30 time returns in a lot of those companies which look boring. Even in the current market, while attention is focused a lot on, the narrative stocks and, the new internet companies have come out as well, it's been dull, boring companies which have also, given you 10 times in the last, 3-4 years. So it's not that if you don't participate somewhere, you won't get it right. B, as you rightly said, this force feeding a child to make him an adult quickly has been the bane of our startup world. And they started with this SoftBank trying to say that if you go and you pick the winner and you overcapitalize it, this child will become an adult overnight. Life is not like that, because even the entrepreneur has to go through that journey of having that experience. It's like a mother has to take 9 months to deliver a baby. You can't, get maybe 9 girls pregnant and get the baby in 1 month. It doesn't happen. And that's what I think they were trying. And SoftBank itself has had its own share of trouble. And I'm just using them as an example, that in this urge to get rich quick, they did something which was against nature. And in that, therefore, you've had these consequences of, it's like with most things in nature, right? That if you kind of take a drug, you're going to bear consequences of that drug. So if you keep that aside and you come back to basics, that what is the character of a person? And I go back to this every time someone asks me to describe how do you pick entrepreneurs, how do you pick people, how do you gel? I go back to an old concept which we had in our Vedic philosophy, but which people kind of denigrated it and made it sound very casteist. It's not about that. They said there are people with different characteristics. There's someone who has a Kshatriya type mentality. It doesn't mean you have to be born, but you have that mentality. That person by nature is a warrior, and that person is an expansionist, and they want to grow the empire. And in that urge to grow the empire, they often fight battles where they might die. But that's the nature of that beast. He can't stop fighting. They can't live if they are not expanding. They can't live if they don't have maybe 2x debt. In that, occasionally you will get a great kind of noble king who's worried about his subjects, and that's what you call Ram Rajya and so on. But they are kings who are just wanting to expand territory for the sake of expanding territory, because I'll be the largest, because they won't realize there is no end to largeness in the world, because it is one world at that spiritual level, right? Then they are the Brahmins who are the most knowledgeable, but they don't have king-like characteristics. So they will go to a certain level, they get their kind of fame, their knowledge is respected, and that's good enough, but he won't scale. So he's the opposite of the Kshatriya. Or then there's the trading community, which is just happy to make a profit opportunity. You may get a PLI scheme sometime, you may get a regulatory arbitrage, and you make that 2-3 years of profit, and you're happy to take that. Like a lot of our startups, when I allude to it, they were actually just doing a regulatory arbitrage. and a copying of someone else's model. It's not something unique that you're building out. I mean, no disrespect meant to anyone, but that's the character of what you're doing. So now you imagine if someone has force-fed, one of these merchant types or one of these Brahmin types and said, now you go and behave like a king. He can't do it. If someone had told me, go and build an empire like Adani, Ambani, it's not my nature. I can't do it. You can give me all the capital. I may even have the managerial wherewithal to put the resources, lead a team, mentor them, and all of that. But if it's not there in the pit of my stomach that I want to go and build this, it's not going to happen.
Yeah.
And I think that disconnect is where you often find that these companies are going wrong. So in that eagerness to say, how come his kingdom is bigger than mine, you end up doing stupid things.
Yeah.
And occasionally you get these rare characters who's like a Brahmin with sort of Kshatriya traits, or a Kshatriya with a Brahminical trait, or a merchant guy with a little more sort of Brahminical kind of thinking. And those companies become tremendous wealth creators for extended periods of time. And that's really what you look for.
Can you exemplify that? Because I'm
No,
sure you would
see,
have
the best
met,
in India, like the House of Enam really got built on something like Infosys, right?
Yeah.
It was the company. Why did it become so famous? Because everyone was, wow, someone with knowledge and someone working in a clean manner, sharing wealth with everyone, can create this kind of wealth for everyone. And I think if there wasn't an Infosys, we would not have had a tech ecosystem in India.
True.
Because the others, remember, Tata, TCS, great company, but it was private, so the story wasn't well known. Wipro, which was the other great company, was almost entirely held by Premji, and the division in the beginning was held within a conglomerate structure because he also had consumer electronics, consumer care, and so on and so forth. So that became the aha moment which unleashed India. And India post 1990 reform of Narasimha Rao is what unleashed what I call the era of brains and brands. So, coming off Marico, which built a brand, he came out of Bombay Oil Mills and he built a branded company. ZTV came out, where all we had in our life growing up was Doordarshan. And we watched, one Chaya Geeta
and
a week.
Mahabharat.
And Mahabharat, and that was entertainment, and that's
Yeah.
it. So things like that came, and for the first time, the Indian entrepreneurs saw I can go and do something at the world level and compete with the best. And I remember I used to serve one of the largest institutional investors from abroad. And it was an aha moment for me when one of the heads came and he saw Infosys and he was shocked with the quality he saw. And he's saying, why is this company not trading at 10 times sales? Now, we guys were 10 times P multiple buyers, remember, back in the day. To hear someone use that terminology is like for a student of Graham and Dodd discovering Warren Buffett. That he talks about businesses and characteristics of businesses and people. So it's those kinds of things when you find you really hit jackpots on those kind of companies.
Yeah, actually, I've read a quote by Masa, and he often likes to compare entrepreneurs to great athletes, where he says that, how great athletes, just by wishing on some things, can often bend reality. That's what great founders also can do. But, given the performance of some of the companies, that is questionable at the end of the day, because what you are saying it has to align with its
to each his own.
Yeah.
Because there are so many people, that's why you have a market. Because if we all had the same view, there would be no buyer and seller.
Yeah.
And that's what creates opportunities for you. And there's nothing right or wrong.
Yeah.
What works for you works for you.
Yeah.
And like I said, you can be the richest guy in India, and then you realize there's someone 5 times better than me in China. And the Chinese realizes they're sometimes 5 times better than me in the US.
It's a never-ending race.
And if you lead your life on the basis of money, power, fame, you're only going to get disappointed. Because like they say in our Upanishads, that eventually there's no joy in the finite. You'll find joy only in the infinite.
Yeah.
And that's our journey, which we keep coming back to as we kind of more and more realization comes. We get more and more humbled by how little and meaningless we are in this world.
Yeah, absolutely. Has your relationship with money, power, and fame changed after all the inner work that you did?
Yeah. Look, number one, I think we tend to be born with some sanskars of our last life. And I can now reflect back and say, I always knew I was going to do well in life. I had this self-assurance, even when our business was going downhill. I didn't have fear. It's like I'll come out okay. And as you grow, it's like the vision and the opportunities keep expanding as well. And as you expand, you realize how little you need, because I'm not going to wear more fancy clothes. As you get older, you can't even eat a lot more food. You don't really have bad habits. You want good company and good friends, and that's not going to change. If your friends change because of who you become, then you're a really sad person. So it's like a scorecard. When you're in school, you get a good score in your mark sheet. It's the joy is in the learning, not in the mark sheet, right?
Yeah.
It's maybe a validation, but nothing beyond that. And what are you doing in the beginning? I remember you would carry your mark sheet or your degree, and I would write it next to my name. And then after a couple of years, like, why am I writing my degree? This is not who I am. Same way, it's not your company or your, the card you were carrying was a very powerful card. And then you realize this card doesn't define me. Like, again, you say in our scripture that I'm not a body with a soul. I'm a soul that has a body.
Yeah.
So therefore, all this doesn't define us. So
we're all spiritual beings having a human experience.
So it's a profound thought when you say, I'm a soul that has a body. Otherwise, we are so consumed with our body, and therefore our self-image and our ego and our perception of ourselves. And it's like, if you think I'm the richest guy in the world, there's always someone ahead of you. If you think you're a powerful person, there's always someone more ahead. If you're famous, there's someone ahead. And I saw this very early in life that and I was fortunate. I had a lot of friends who came from families which were either very rich or very famous. And those families went through lots of ups and downs, and the kids were not particularly happy. So I said, this can't be the real meaning of life.
Right.
So it comes. I don't want to sound preachy on a show like this. The audience is very young.
No,
but
not
it comes.
at all. Because I think people can make very informed decisions in their earlier years if they have this kind of spiritual knowledge back.
Can I explain it in the most simple way? That if you can have an attitude that I'm an actor in a play, and the role that I'm playing is in this play, therefore I'm not this character. If you start thinking, I am Shah Rukh Khan, and therefore this life revolves around me, you're doing a disservice to yourself. So, in this play, I may be the hero. In the next play, God will put me in the villain's role, so that I could learn from that villain's perspective why he or she was behaving in this manner.
Yeah.
In another life, I may come as the father of the hero to get that person's perspective. In another life, I may come as the female character to get that perspective. So our soul's journey is to actually do this kind of learning. Like, we come to college. We learn physics in one life, but we may come and do mathematics in our next life, and third life maybe philosophy or whatever. So we are coming here to learn certain life lessons. And if I start thinking, because of the role that I'm playing in this current life, if I am, Elon Musk in this life, I'm a really rich dude and very smart. Next life, who knows where you're going to come? You may land up in Russia in your next life, for example. So you just, therefore, very early in life, you can find out your true nature. What is your purpose, or why you're here in this life? It could be to solve some relationship issue. It need not be something so grandiose as solving the world or making $1 billion or whatever. Those are all incidental. What you call memorandum of articles, main object is finding this out, that solve this life's purpose. And then the ancillary objects will take care of itself as kind of helping you in this journey. So you may become very successful, but it may be to find out how people behave. How do you deal with envy and jealousy? How do you cope with envy of someone who's doing better than you? If you can be equanimous in that journey, that is a successful journey, right?
Yeah. I think Charlie Munger often talks about this, right?
The
like envy,
greatest
resentment, comparison, all these things are completely futile.
Like, can you imagine Warren Buffett's worth, more than $200 billion? His partner, Charlie Munger, dies at age 99, almost 100, at $2 billion. He's 1% of his partner. But you never heard them comparing with each other, never heard envy coming out of even one sentence of Charlie Munger, never looked at Buffett talking of Munger in a little condescending tone. And Charlie was the intellectual powerhouse behind, the building of Berkshire Hathaway.
And Warren Buffett often says that also.
And end of the day, okay, you have 200 or you have 2 billion. What are you going to do? Who is it going to? Like Nimish Bhai tells me very well. He's saying three things will only happen. You'll pay more tax, you may do more charity, or your descendants will be flying, private jets. How much can you consume in your life? So, and even if let's say, I don't want to use numbers, but let's say Munger has 2 billion. He couldn't consume the 2 billion, no? He left 1.9999 for his descendants or the charities that he supported. So what's the point of just chasing that compounding also? I've come to realize it may be sort of heretic to say it. What are you compounding for? If you're not able to lead a life on your terms, which is your definition of success and happiness, just having a mathematical number at the end of your life is of no consequence.
Going back to your example of, saying that, finding one's true nature and realizing that early on really helps you. I think you had that same intuition or before starting your investment venture, Enam Holdings, at that point. So was that something that you were in tune with even then? Because, for people, I'm asking this for people in their 20s and 30s.
I'll be honest. My father started his life in a very humble way. He started as a supervisor in a factory and grew up to then eventually own his own company. His aim and hope in life was that I would come and then run the company, which was in flexible packaging. And it was an industry of the future. And all my training, I did CA because I need to get numerate. I wasn't an engineering bent of mind. And then the MBA was really to go and broaden the horizons and see the world, as I'm saying, and see what else is happening in the world. So then you can apply it to your business. In the course of my journey in London, where I was doing my MBA, I had the chance to work for a leverage buyout fund over a summer project and a second year project. And I was like, wow, this is like second nature to me. And it's not a world I had been exposed to at all. And when I came back, unfortunately, the family business was going down the tubes. We used to supply to Hindustan Lever and Nestle and all of that. And I'm like, I can't be doing this my whole life. Sitting outside the purchase officer's cabin and like begging him for business. And then they change their mind and their whims and fancies, and they have all the bargaining power. Because by then, doing an MBA, Michael Porter, competitive forces and all. And in that journey, then my father introduced me to, through one of his friends, to Vallabhbhai's eldest brother, who's no more now, Manikbhai. And one thing led to another, where Vallabhbhai had, he said something which he may not remember, but I never forget to remember the moment of epiphany for me. He said, son, you come from a business family. You will look for opportunities. Then you'll put resources around that opportunity to, take advantage of that opportunity. And then you'll have control of that business. But back in 1990, 89, 90, you may not have an exit because there wasn't such an easy M&A market. And we were indeed suffering. Our business is going down. We're seeing it going down. And how do we even exit it? We can't even close the business, nor can you sell it. So he said, but if you come with that same mindset here, look for the opportunities. They are often ready-made management teams because someone has also taken it. It's nothing unique that you're doing. Someone else is playing. You can find out who the leaders are. And at appropriate times, you can have as much ownership of those businesses as you want in the listed market. The only trade-off you have to make is in your mind that you will not have control. You'll have ownership, but you won't have control. But remember, you have exit, which means you can take the boom of different industries and different cycles and do much better. And actually, by God's grace, from where I am, maybe more than 100,000 times up from where I started my life. If I had been doing that business, if I had been maybe even 1,000 times up or 10,000 times up, it would have been, fairly successful. But this just opened a completely new world. And the fun of our profession is you meet the best people in the world. You're learning all the time. And that plays to my nature, right? I'm a student. Till the last day of my life, I'll be reading. Till the last day of my life, I'll be meeting people and learning. Till the last day of my life, I hope I can travel and see what's happening in the world. Because being aware with what is going on in the world is what makes you a better human and a better investor. It's the same thing, actually. And that epiphany, I'm glad it happened to me early in life. Otherwise, I could have been running some factory somewhere. And
you would have still done a great job.
So, sure. Like I said, from a young age, I knew I'm going to be successful, whatever I do. I don't think I had a doubt that whatever I do with excellence. I have a nature, even in school, I had leadership, traits. Where even then building up, class monitors, house captains, became head boy early. So all that thing just came naturally. But, sometimes you may not get that opportunity. You may not have that luck in life. So if you start kind of manifesting and going in a direction which is in tune with your nature, you just make yourself more and more open to getting that luck. I think that's all you can do. Position yourself for luck.
You've come to the right place because I call the tagline for this show is a front row seat to people building India's future.
No, it's true.
I think because that's truly the most exciting
Shrishti, if we are born in India, now, when you said in the beginning, let's say you're born in Europe and you're very bright. What do you do when that, the demographics have gone against you? The regulatory environment is frankly hostile. It's the greatest place to go for a holiday. But if you have to live your life there, you wonder
That's
will
why
I be
people
able to
don't work there. They
right?
have
Yeah.
four
But
day
but
work.
it's again, it's like what I'm saying here will apply. Like they are already rich if you're at 80, $90,000 per capita income and you're
Yeah.
next gen, and you've inherited couple of $1 million and you're living on the French Riviera. Like, why do I need to work?
Yeah.
So you see the laziest people in the world, they happen to be in the best places, right? You'll go to Spain, Portugal. You don't find them working. The people who are working hard are those who have come from a little hostile environment.
Yeah.
The Scandinavian countries you'll find. Even in India, you see the entrepreneurs from where they come. They don't come from the resource rich states.
Yeah.
They come from the states where you have to go out and make a buck for yourself. So I'm again saying God's putting you in a certain situation to draw the best out of your soul for a particular learning to come from you. Let's say Warren Buffett had said this famously. He's saying, if I wasn't born in US and he was born in Bangladesh with capital allocation skills, where would he have been?
Yeah.
So if we are being born in a country where, frankly, you still have 90% of your GDP ahead of you, 90% of wealth creation ahead of you, you're looking in the front. If you're in Japan, you're in Europe, you're looking in the rearview mirror. The best years are gone.
Yeah.
But those countries were built by people who came out of hardship and struggle. Post Second World War, would you have given a chance to Japan? And look what they created.
Yeah.
India and South Korea had the same per capita income in 1950. Look where South Korea is and look where we are. So you can make bad choices. You can be dealt a good hand and you can make bad choices and still not benefit.
Yeah.
So all I'm saying is try and find what you're good at, go in that direction and get yourself open. Be ready to get lucky.
Yeah.
If you don't have that readiness, you can't just sit back and say, oh, I'll wait and someone will throw me a stock tip and I'll make money and I'll get lucky. It doesn't happen.
Yeah, and what you said about being expansive is,
Yeah.
I think it's so
Yeah.
true, because
Yeah.
when you set out on that path,
Yeah.
then the opportunities
Yeah.
just magnify.
Yeah.
I think there is
Yeah,
serendipity
that is,
and
look,
beauty to
our
that.
nature is again come back to the same thing again and again, that if we are basically that one soul which permeates the whole world, we have taken a particular form in this play to experience certain learnings and emotions.
Yeah.
But your nature is, I want to be expansionist. So a spiritual person is very unhappy living in a city. Like you call me to Lower Parel, it's not joy. But you say we'll meet, on a hilltop, and I'm looking down at the river and I'm looking at snow-capped mountain. Your soul feels alive because
Maybe
that's
next
where you
recording
belong.
we'll do in the
maybe.
mountains.
So, but that you'll find people who enjoy that openness and vastness. That is, spirituality is nothing else but being one with everyone else.
Yeah.
You're not distinct. The minute your ego and your sense of self being very great goes, you'll dissolve into everything else.
Absolutely.
Yeah.
And coming back to Enam's journey, because I find it very fascinating that in such a short span of time, you were able to become like the household name in terms of a banker that everyone trusted, be it the Birlas, Rahejas, Infosys. How did you inculcate that, or how did you build that level of trust with all these people?
So honestly, credit must go to the founders of Enam. I was, like I've always said, they were the architects. I was only the interior designer. So they built the house, and the cultures, values, and what I call the benefit of good sangat, good company. That spirit, even after we've had this whole journey together, the businesses are largely sold, yet everyone sticks together as a family because you were there united by those values. It was not about that business ever. And so those values, because both Vallabhbhai and Nimishbhai, they come from a Jain background. I may have come from, Sanatan background, then I've also gone into Vipassana and Buddhism, but I also understand and follow and respect, Jainism. Because the basic precepts are all the same.
It's all the same.
It's all dissolution of identity,
Yeah.
right attitude in life, right speech, right action, right profession, and so on and so forth. And it was out of a sense of service that the firm operated. And I mean, that's how you resonate, right? The first meeting, if I meet, for me at that point, Vallabhbhai is a stranger.
Yeah.
And when he says this one sentence, which I told you earlier, I basically said, can I start from today? We had no
What do you
terms.
think made him bet on you at that point?
So there's certain backstory to it. I won't get into it. But even he saw a spark, because my question to him was, will I get that chair one day or not? And he was, if you don't want this chair, why would you come here? Whereas if I'd gone, elsewhere and done a job with a, large industrial house, that chair was always out of bounds. That at best you can, be the number 2 to the owner's son.
Yeah.
And my father used to say, do you want to be someone's chauffeur for your whole life? Or isn't it better you drive your own taxi? And my dad used to say this also, that if you look for a cushy office, you will live in the extreme end of the suburbs at the end of your life. In the beginning, you'll enjoy the home and the chauffeur and all, but when you retire, you'll be back there.
That's
But
what I felt about working at Meta, honestly. But I don't know in hindsight if it was a good financial decision or not. That is questionable.
No, because if you take something and you make it great, that is really the real purpose. But look, it may work for us, for someone else, it may not. Someone may need a steady income and there may be different life, thing. So no disrespect to anyone. But like I said, things come together at certain moments, this is it for me. And it works. There were enough times in the journey where a lot of the foreign clients I serviced, they all knew there's a bright chap and he can be of great value. I could have been India head for, firm A, firm B, firm C, relocated elsewhere, left my family behind, gone to US, gone to Singapore, wherever. You make certain choices which land you where you land eventually. And like we also describe it, your young audience will understand. It's like a multiplayer game which is set out. But the game is not predeterministic that you'll start from here and you'll end there. It depends on what choice you make. There may be 8 or 9 outcomes, but it's not beyond that in kind of the role that you're playing. So in that context, I think the group of people who got together at Enam, the values which all of us live by, we all lead balanced lives. On a side, I say we also need to all be good cricketers and we all need to be good singers. Otherwise, we don't qualify. But
that still happening?
Yeah, very, very much. So, but at another level, it is that familial feeling of building a company. And then as the journey grows, you realize, how the game expands more and more and more. Till you come to a point where you say, look, now this investment bank, which was really built to help younger companies of the sort you're describing today, to bring them to their great stature. In some of them, we could co-invest. In some of them, we only help them as investment bankers. But now it's become an army which needs to be fed because you need deal flow to stay on the league table. Then it's no longer the original objective we set out for, and it needs a natural home to fit into. Also, it's becoming a balance sheet game if you want to do M&A. You also need to be good to your clients. You have to provide debt, and we are not a debt house. So from that perspective, the kind of business needed a natural home as well. And again, we went through series with, there were people from Japan, there were people from US who were owing us. We eventually chose to go with an Indian firm and merge with Axis Bank. But I think the journey was done gracefully. Money was left for all our colleagues in the company as well. And we still remain friends. And there are enough people Vallabhbhai has trained that I have had the fortune to train who are, doing well and successful, and we feel happy. One more thing I'll say of our capital market profession is most people in this market are very happy to see somebody else's success. When I look at normal industrialists, they're very envious of.
It's not true in other industries.
It's not true. Therefore, I find it's like that. I wrote a piece many, many years ago for the Economic Times on calling the capital markets is the path to nirvana. Because this concept of being attached and detached. You're investing and you're helping. And yet when you sell out, you're detached. And you have to be objective, because at certain point, if you don't sell out and you're living in the bubble, you're going to destroy your capital as well and your peace of mind. So I think it's a fast-paced spiritual laboratory. That's why you end up in the capital market. Either you go berserk and you become like one of those famous stock operators who try and then eventually blow up, or you end up on the spiritual side over here, because it's a really fast-paced laboratory.
Yeah, absolutely. I couldn't agree more. But when it comes to, the $400 million sale to Axis Capital, at that point, what were the strategic and emotional implications on the founding team? Because
that's what I said, that there is some innate logic to what the business needs, what the team needs. And if we are not the right stewards of that to take it to the next level, then it's only right that it's like how you get your daughter married. No? You don't say, I'll keep my daughter for myself. There is an emotion attached to it, but there's also a joy that the daughter is going to a better family and a rightful place for her. I think, maybe it was most emotional for Vallabhbhai, because at heart, I'm an investor. I was running the investment bank really as his steward, as his almost like adopted son, to say, take it forward. But he knew well also it's not in my heart. We were looking also for other people to be a CEO at different points. Nimish Bhai, who's the partner, has always been an investor through and through. Akash, who's Vallabhbhai's nephew, Manik Bhai's son, been an investor through and through. So if you're an investor, I say this again with no disrespect, you're basically a farmer. You're planting a seed, you're waiting for the crop to grow, and then you may reap it, harvest it, or you may let the crop continue. But an investment banker is a service provider, or at certain level, when you go to a certain size, you're also a hunter because you're looking for a mandate from someone, you're looking to make fees from someone, you're looking for something. So if you're doing it with the service mindset, which I think we were originally, and all the investment banks originally start with that how can I help this other person grow? Till there comes a point where it becomes
All about
like
the
a listed
management
company.
fees.
No,
and-
it's a how do you say, a treadmill that, 30
Hedonistic
assignments,
treadmill that you have
and
to keep.
each IPO has become like one more potato in, potato out for you, and that's
Yeah.
not the right way to be doing that as a business.
Yeah.
So then you're like a doctor who was a family doctor. And when you asked us earlier about how did we build trust, because our behavior pattern was of a trusted family doctor. We were not prescribing a medicine which we would not take ourselves.
Yeah.
We would not do a transaction if it wasn't right for the person. But if I'm now running a investment bank with 500 and 1,000 employees who need bonuses at the end of the year, the mentalities become very different. And already by 2005, 6, 7, with what was happening in the US, you could see how greedy the world had become,
Yeah.
and how this crazy bonusing system had changed people's behaviors in our own firm. Also, I saw it. And I remember feeling a great sense of discomfort at that time. And I think I even wrote in that article, and we used to have frequent discussions, that we guys are being rewarded far beyond what we should be. You take a doctor, you take a nuclear scientist, you take any other profession. The analyst is coming here writing wrong English and he's getting 2 crores a year and still thinking he's the cat's whiskers. There's something innately wrong with this system. This is going to blow.
Yeah.
So not that I knew about subprime in the US, I was some great knowledgeable person, but how you get that sense from the world that this is going to blow.
Yeah.
So I think it's a combination of things that what was meant to be. I think we did the right thing. We've all been very, very happy about it.
I think that's the natural evolution of funds
Yeah.
as well, right? Like we see private fund in the private space, like fund sizes just get bigger and bigger
Yeah.
because everyone's after the management
Yeah.
fees, and then you have to like question the
Yeah.
quality
So
of some of the investments.
You've seen that happen to the
Yeah.
greatest of funds, right? I
Yeah.
mean, in this round, I think Sequoia has been the very popular name, but
Yeah.
back in the day, it used to be Kleiner Perkins.
Yeah.
And what happens? Fund management as a profession and investing as a business are two different things. In that fund management business, marketing is the key role.
Yeah.
That how much more resources can you bring from where? And the CIO is not necessarily the most important character. It's the
Yeah.
chief marketing guy who's bringing in the bucks. Even in investment banking, I had this terminology, we used to call them finders, minders, and grinders, right?
Right.
Which will apply in most service
Yeah.
businesses. And eventually, the minders are always thinking that, hey, I'm doing all the hard work, I'm the knowledge worker. But is this character who knows how to network and bring a mandate in or charm the client and bring him in, who's making all the bucks? And then how the pay goes and how the bonusing system works just creates a system which is inherently unstable beyond the point.
Yeah.
And I think the same applies to the fund management business,
Yeah.
because PE funds are now investment banks with a wallet,
Yeah.
and they are behaving as such. And therefore, you're finding those traits coming out more and more. And therefore, we could have gone and raised, billions and billions and billions of funds. But by grace of God, we've all done very well financially. And if you can run investing for yourself and you're not running against a benchmark, you truly make better investments, better informed judgments, and you're building crops which you hopefully are proud of. And more than that, you're building character and culture in your own families in which you're living.
Yeah.
So I think that's been what it's about.
Yeah,
for us.
because I think in the startup space, especially with SoftBank coming out with $100 billion fund, then I think Sequoia came out with a multi-billion-dollar fund, which is 4x of what they had previously done. So it just kept on inflating fund sizes, because of which I think overcapitalization happened, and we've gone through this whole vicious cycle, I would call it. But there will be corrections.
But
and,
it's
like,
a cycle. I mean,
yeah.
everything plays out, and the firms with the good cultures and good traits will always outlast and live
Yeah.
beyond. It's happened in every business. But having said that, the Fortune 500 changes, the Nifty 50 changes,
Yeah.
the fund management 50 change, but there are always those 3, 4, 5 which are left.
Yeah.
Uh,
And coming
and
back
that's
to
the journey.
Nimesh Bhai
Yeah.
and Vallabh Bhai, what were some of the core principles or wisdom that you imbibed from
Oh,
them?
lots. I mean, look, it's not like you're not writing it down like
Yeah. But the
wisdom or
biggest
learning,
life
but the way
lessons
they
that
live.
you've applied.
So there are lots. I think I had done an interview. I don't know if I shared also that the first thing there's to start with is, like, first of all, know yourself. And I give that in the example, if your basic characteristic is Ravi Shastri. Don't try to hit the ball like Sachin Tendulkar, right? I could be sitting in the room with Nimish Bhai. He has a different risk appetite. He has a different knack of grasping certain businesses which I don't have. So don't copy me.
Yeah.
Build your own style, right? The Xerox copy, we say, I do my presentations at Flame now. I say the Xerox copy is worth 50 paise. The original is the one which is the masterpiece, right? So in the art world, the guy who copies a Hussein will not sell a painting at 1 crore. He's going to get 1 lakh only.
Yeah.
Same way in investing, everyone says I'm Warren Buffett, but there was also a George Soros. There was also a Peter Lynch. So each person comes with his or her own style, and if you can't be original, you're going to suffer. B is understand there are cycles in everything in life, and the cycles of nature, and apply that to investing. 3, everything is impermanent. Again, spiritual background.
Yeah.
That this too shall pass. The bull market will pass, the bear market will pass, this company's glorious journey will also pass, this person's journey will pass, and so on. So a lot of those kinds of little things, which I think if you kind of infuse spirituality into whatever you do in life, whether it's business or investing or whatever, I think those are really daily life lessons that one learned from them. We didn't have FOMO. The market's going up. We lived through Ketan Parekh, we lived through Harshad Mehta. Nobody in the firm bought any of those crap companies. You never have FOMO. Even now, there are a lot of companies which are going up, 100 multiple, 200 multiple. You can have FOMO. And I'm in the market, I know what's happening.
Yeah.
We will not participate. It's okay. Like they had that self-restraint, which comes from, even Jainism, that we will not participate in anything to the harming of animals, tobacco, liquor, and so on.
Right.
So when you decide this is my kind of boundaries and this is also my circle of competence, and you're playing to your strengths, and then you only swing, like Buffett says, you swing when you get a fat pitch. I can hit this ball for a 6, otherwise why are you swinging? We're not trying to make 2 runs, and it's our own money. So you don't have to participate in everything. You can miss 80% of the market and still end up very wealthy. And even if you miss one cycle, you're there in the next cycle.
Yeah.
And when I say compounding of 100,000 times in 30 years, even if you do 10 times in 10 years, you'll be 100 in 20, you'll be 1,000 in 30.
Yeah.
So the rate of compounding can be incredible in India because the opportunities are so much. And I don't consider myself some fantastic investor. I'm a slightly above average guy.
Too humble.
But that but I honestly mean it. There are much better investors out there. I also saw the flip when I went overseas. What is so great in these guys? We are worshipping them.
Yeah.
I even work for a large PE firm globally. Other than the currency being 80, 90 to the rupee, the units they were handling were the same. The brain power is the same. Like it's like your Facebook.
Yeah.
I mean, sure, Mark is a great guy and Cheryl was a great lady and so on. But it's like if you had been there in that place, you would have done it as well. Like today, Satya Nadella has done wonders at Microsoft. Right?
Yeah.
So it's not about Indian versus someone over there. It's what opportunity you are in and what your relative currency or your relative balance sheet is.
Yeah.
So I think knowledge-wise, there are enough people in India with as much knowledge, wisdom on investing or business as there are elsewhere in the world. I think the economies are ahead of us. Maybe their governance systems are ahead of us. Maybe their evolution stage is ahead of us, and therefore they are where they are. But I never doubt for a minute that our country is destined and bound to catch up. And even though we may have periods of darkness, if we miss even the next 10 years, I think of ourselves as a civilizational, country, not next 10. At some point we'll catch up because youngsters will come and eventually a nation rules because of tech prowess. It's about knowledge end of the day. Those countries rule. We used to be the knowledge center of the world back in the days of Nalanda and so on. Then we went down and we're coming back slowly. We are not yet there. We are still processors for the world. But the day we say, no, we want to have technological leadership, the way the Chinese did, I'm so amazed with what they've done in the last 15 years. They no longer behave subservient to Western tech. And they're leading in almost all tech.
Their attitude was
and
that
they're
we
going to
build
lead.
it ourselves.
They're going to lead on that.
Yeah.
It's their governance which may blow them up. The attitude of, I'm the
Holding
king and I
back
know
the
best.
entrepreneurs.
Or this very abrasive behavior with the rest of the world, that may blow them up, which indeed it happened to US as well.
Yeah.
That till the point the US was this nice liberal power looking after the world as elder brother, as opposed to now trying to behave like this very cantankerous cousin brother fighting for his rights. It's a character change and that result will show in the world as well. So same thing for us.
You said that you admire some other investors in India. Who do you look
No,
up
no,
to?
there are lots. Honestly, अपने जो अपने बोलते हैं ना 33 कोटि भगवान है. All you're saying is there is God in everyone. There's something to learn from everyone. There's something to learn. There, you started with saying something I sent you, but there was a call which you made to me, and it took me 30 seconds
Yeah, I
to
was
say
so surprised.
because you described your journey, and I know where your journey is going, and that's all it took to say, I can connect with this person. There's something to learn. See, even you need guts to call up. Like you're sitting in UP, you're calling some random guy in Bombay, and then you're saying, look at what I'm doing, and this is what I want to do. I'd like to be helpful, because if it helps another, there are 100 million investors coming out of UP. If UP doesn't become $1 trillion, there's something wrong with our country. So let those guys come, let them participate. Why should only the foreigners make money in India? Let our Indians get rich as well. And if more than that, if we can rediscover our rich spiritual heritage to become really true, like what I call human beings, I think it's about that. It's not this Western thing of more money, more fame, more power. वो होगा. 20 साल में, if you're 30 years old, in 20 years, if you don't go 100 times, which is 24% compounding, 15% हो जाएगा. 15% is 15, 16 times in 20 years. You'll still be enormously rich. So it's going to happen. You are in a country which is progressing, will grow at 6, 8% plus 3-4% of inflation. 11-12% तो ऐसे ही होने वाला है. So why are we so anxious कि कल के कल में अमीर हो जाओ? Enjoy the journey.
I think this generation also comes with a lot of FOMO and like hustle culture.
No, it's true. At a young age, I can't say when you're 25, when I want to be like, I need to make it in life.
What would you tell your 25-year-old self?
No, I think 25-year-old life today, I would have spent more time getting spiritual far earlier. At that time, it was about you become डेढ़ शाना when you CA कर लिया, MBA कर लिया. Like even now, I tell my kids they're both Ivy League. They come back with like that certain cockiness which US builds into you, right? And with no disrespect, they're very knowledgeable. They've gone and competed with the best in the world. They can take on the best in the world. But that surrender and that humility which comes from knowing I'm no different from anyone else in the world, and I'm playing a role in a play where I've got this particular character to play in this life, there has to be some gratitude attached to it. Like the people I met in my life, the people I served as a banker to them, like where if I was running, flexible packaging, you think I would be sitting in the same room with Mr. Narayan Murthy, with Mr. Mukesh Ambani, and so many of these legends to get to meet them. I just feel humbled and grateful. In our market, the kind of investors one has dealt with, from Nimish Bhai, Radhakishan ji, Rakesh ji, so many. You learn from everyone. Then you meet the youngsters who are coming and showing you new tech and what's going on. And if you don't stay contemporary, you're going to be a obsolete dinosaur. So it's that whole feeling of being engaged and alive all the time is what the whole fun of this profession is.
Yeah, absolutely. And you always talk about asymmetrical bets because, and I'm a big fan of that. You have to figure out where you can have tremendous upside. Dive into that concept a little bit more. What made you realize that there were opportunities that you could spot?
Well, to be honest, that is first is Nimish Bhai. He says if it's not, you have to be right on all the 10 bets, but when you win, you shouldn't regret that I only won so much. So both. Okay, let me take a step back. He's saying the only thing in your control is your entry. After that, what the entrepreneur does, what the economy does, what the world does is not in your hands. Right? You may think, I know perfectly, this is the momentum of this business, this is where it will go. Regulation can change. The entrepreneur's mindset may change. He may start stealing money, like you said, in some companies. With all good intentions, everyone starts. Regulation may change from the US, some tariff may come, blah, 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 whatever. So only if your entry price is so attractive that even the most bearish guy cannot come and shake your conviction. So you have to start with that knowledge and that conviction to know that what I'm betting on works for me. And you're going somewhat against the world because it won't be a popular stock at that time. But he taught us to think in terms of possibilities before probabilities. That is it possible this company can earn its market cap in its lifetime? Maybe 10 years later, 20 years later. Is it possible? If you're buying a company for whatever, $100 million total value, can this company ever make $100 million profit? Otherwise, why are you going in here? I've converted it to a more easy one for youngsters today. I say, in 5 years, can this company be a 5 PE stock? So if it's very, very high growth,
Yeah.
How many years ahead are you paying for? So if you think, no, it's 5p after 10 years, then do you have the horizon of 10 years to be with that company? Because after that, your really earning will start. Because eventual destination of most companies will end up somewhere between 15 and 25. Like even take the great IT companies of today. They finally went to the journey of 100 and they're now closer to 20.
Yeah.
So at some point in that journey, it will be, and the more you pay upfront, the longer you have to wait. So if that asymmetrical bet then looks outsized, that if I buy this at say a 5 multiple 5 years hence, I know what journey could be, which means I better know the business and what could impact it. And B, I'm giving a chance for myself to get a P upside. Because if I'm already paying 50p, then what is my upside? My downside is on P and my only upside is earnings. Here I can get both. So worst case, I'll make 15p, so it'll be 3 times in 5 years, which is 24% compounding. And if hopefully I'm in a good business, I can make 5 times, which is 40% compounding. And if you get a kind of bubble going, which occasionally happens in life, and you get to a 50p, then wow, you're in heaven. But when you get those, then don't be pussyfooting. The second thing he taught us was position sizing. That then don't buy 50 stocks, 2% each. Then you load up. Like my son, he made an investment 2-3 years ago, and he had a kitty of whatever, let's just say 100. And he found a company which I've spoken about publicly, so I'll share, called Gravita, for example. So a very old business, picking up waste lead from batteries, discarded from cars. The macro theme is, it will go into ESG, blah, blah, doing good for the world. And he's also impact-oriented chef. You can see the profit of this company back in the day. You could see easily they will do 3 times in terms of profit. There were fears because they were sourcing from rest of the world, Africa. Will the money come back? How clean? How dodgy? Whatever. Because when you're unknown, everyone asks questions. When your P is 10, there are questions. When your P is 30, then broker reports will come with 50 multiples from them. So he met them. He went, visited. He came back very convinced that they can make this 10-11% type margin. This is the volume growth possible on lead, aluminium, plastic still lies ahead of you, rubber. So many things they can do. The team is completely united. A team which was built together from the founders, college colleagues, and so on. All been there for very long, and the runway looks clear. And because he was early in life, a young guy, he would have bought maybe 2 crores out of his 100. So I say, now you size up over here, and then this is where you'll make 100 crores. So that's what I mean by it's an asymmetrical bet. You start with a multiple of, I think it was probably 10 or thereabouts, and then it went all the way to 30, and it's gone 10x for him in like 3 years. So I'm saying it doesn't have to be necessarily a sexy business and a tech business. And he comes from that sort of background where he enjoys tech and biotech and EV
so how
and
did
all
he
of that.
find
But this is the learning that money is to be made everywhere. There are cycles. Like the last decade may have belonged to tech. I am of the view this decade belongs to hard assets. Like gold is going to do well, silver is doing well, uranium will do well, copper will do well, real estate is doing well. So there are waves in the world, and you have to get aligned to them. And that's the sort of learning which comes out.
And value investing has always been your forte. So
there's only value investing in the world. Anyone who tells you otherwise,
but
otherwise it's momentum investing. So you may call it growth investing, but growth is saying what is the value I'm getting for this future growth at what point. That's how I described it. That let's say you bought Meta at certain point. At what point in life was Meta also a 5p stock? No, looking back from that period in time. Like Nvidia, before 2019, what are the earnings? Now, if you were the person who knew the tech and he said these earnings are going to go up, it's gone up 60 times? Some crazy number like that. Now, I don't understand that tech, so I have no reason to participate there. But I used to also wonder, someone buying this at 20, 30, 40 times sales. But that sales actually materialized. I have not seen in my life. I'm stunned with the rate of change in Nvidia. It's like a bubble which parallels what happened to Cisco in 2000. And it will also, I feel, go the same way eventually because it's a capex good stock. But if the earnings is going to go up 30, 40 times, if you're paying 30 times sales, 20 times sales, in 3 years, you're going to look damn smart. But if I don't know it and I'm just chasing, that train and it stops suddenly, I'll be left holding the baby. So that's why I say, do you know longevity of this business and what could drive its earnings? If you're looking, like Buffett used to buy in the old days, he bought brands. he was also paying a lot for the future.
Yeah.
He was not buying 10 P stocks when you're buying brands,
Yeah.
because the brands were the platform companies of that era.
Hmm.
Today we are using a more cool term called it's a platform play.
Yeah.
Platform play means I'm doing all my investments upfront through my P&L, and then I'll get operating leverage. So say we did Lenskart when I was in my TPG days. We paid a lot for the future, but guy is 28, super sharp, knows what he's doing, maturity beyond his years. 25% of India needs eyewear, plus he can go overseas. And you know that I'm going to make a 60% kind of gross margin over here. Eventually, it has to come to a 15-20% type EBITDA.
Yeah.
On that basis, I can know what multiple of sale I can pay for this company, because I know what the PAT will be of this company. Let's say he ends up with a 10-time post-tax profit on his sales, and he'll trade eventually at 20-25 multiple, let's say. So 3 times sales, if you pay for someone like that, you're in business.
Yeah.
And if you're growing at 50%, that means I've taken a bet 2 years ahead of time. So I paid 5 times or 6 times sales. So you can slice and dice anyway, but eventually you're looking for value.
Yeah.
And what am I going to capture and in what time frame? The fun with being a private proprietary investor is our time frame can be very different from the market.
It's
So
evergreen capital.
a local fund can be benchmarked every quarter.
Yeah.
They may suffer 1 or 2 years until the trustees or the customers will fire them.
Hmm.
A private equity fund by definition has a 5-year, 7-year life cycle.
Yeah.
There's a company which we've been involved in now for maybe more than 10 years now, and he's gone from basically zero to $300 million dollars of profit.
Wow.
Now, if you were a fund, you would have sold out many times
Yeah.
over. Like even Lenskart, because of the life of the
Yeah,
fund.
I was going to ask you
TPG
that how
sold.
does one decide when to sell
No,
in these
that
things?
was in TPG days. So they
Yeah.
had a fund life, and they have
Yeah.
to. They
Okay.
can't keep evergreening. So they made the exit, and the next funds have come and they've taken it forward. But that's why the Securities of the world have now come back and said we want permanent capital.
Yeah.
Because we're helping these companies come to this stage, and then from here again they become 10x, 100x, and we feel left out.
Yeah.
So that whole journey, how much do you want to play and be part of, is up to you. And therefore, being the ultimate nirvana as an investor is to be a private investor. I'm not answerable to anyone.
Yeah.
And if I get things wrong, only my wife knows, and she anyway beats me up for various other things, not only this. But yeah, you, like I said, you design the life you want.
Yeah. But in your son's case, for example, going back to the example that you shared, when would you advise him to start thinking about selling, or would you?
So he sold. He did sell half his position in that company. Not because it went up 10 times, but it was already trading. So the benchmark I gave him that if this stock from this price falls by 33%, are you going to be a buyer? Because you won't get that 5p from that price.
Yeah.
But to get back from 100 falling to 66, now the stock needs to go up 50%. And if at that 66 you're not going to buy it, then you
Yeah.
better be thinking of selling it. Because you often, as an individual, we pay tax. So sometimes that tax starts, messing
Yeah.
up your brain. I said, don't let tax affect your consideration, because the market doesn't know your tax problem. The market doesn't like the price;
So
it's going to
true.
sell it off.
Yeah.
And I think it had gone to, it was a forward 60 multiple at that time. So I think it was a no-brainer to do it. Having said that, I've learned separately, differently from Manik Bhai. Again, a story I've narrated in the past is I used to be the original TMT analyst. So I used to buy telecom and media stocks back in the 90s. And I'd written the business plan for the erstwhile ZTV, which came public in 91, 92. And by 98, it had come back to its IPO listing price. It was 70 rupees, 16 crore equity. So like, you can't imagine 130, 140 crore
Yeah.
market cap for ZTV. I'm like, this is a no-brainer. I know this business. The world was worried because Sony and I think there were other, not Sony, but other foreign channels were coming. Plus, Rupert Murdoch had just bought Star TV. So they
Fox,
were going to
he
enter
had
as well.
launched. Yeah.
The market was selling off. And like, nothing doing. The guy who's sitting in India will eventually win. Because they know how to do cost, they know
Yeah.
what creative and so on and so forth. But long story short, the price was so attractive, I'm like, I can buy this as much as I could buy. I didn't have that much money back in that day. And I bought it, and within 12 to 18 months, it was up 10x. So you think you're the cat's whiskers, right? Young guy, like what, 20, 30 years old, 32 years old, your age. And I made a 10 bagger. I'm damn smart. I know this business well. And I start selling. Manik Bhai sitting there and saying, Manish, this market is telling me something else is happening. Don't sell it. So I'm like, I don't care about the market. If I'd believed the market, I wouldn't have bought it. So, cocky young kid, I'm like, I'm selling it. And let's assume I put 10 lakhs and it became a crore. And a crore back in 98 is big money. In 3 months, it went up 20 times.
Oh, wow.
800 rupees went to 16,000.
Wow.
Okay, that is the era of Ketan Parekh. It was completely crazy. Eventually, it turned and came back to that 800 or equivalent only, because they split it and made it a 1 rupee share. But imagine if you had just listened to the market and he said, look at what you call higher top, higher bottom formation, let the market tell you, sell it from a fundamental portfolio to a technical portfolio. After this day, you know I'm selling based on price. Don't discuss fundamentals.
Right.
When you see the turn, sell it. You will still get a higher average price than what you're selling at fundamental. So he taught me to take signals from the market. Nimish Bhai's style is still very fundamental oriented. He will buy when he wants, he will sell when he wants, pure value based. He may hold for 20 years also. He doesn't care if stocks fall 50%. Some of us would say, no, we should put a stop loss amount, blah, blah, blah. So very distinct styles. Again, what works for you, works for you.
Yeah. But do you still have those feelings of 30-50% drawdowns in your portfolio? And
yeah, it happens.
How do you emotionally regulate
No,
yourself?
if my business is compounding, I don't care. And I buy at underlying valuations, which I know what this business is worth. See, from early days in Enam, we were trained to be business buyers. We don't think as stock guys. I'm buying the whole company. At what price am I buying the whole company? Then whether I bought 1% or 5% of the company determines the stock price.
Yeah.
I get people, my relatives, even today they call me and I can't change their behavior. Like someone will call and I'll say, you should be buying, let's say ICICI Bank or HDFC Bank. And they're like, क्या 2,000 रुपए का शेयर बता रहे हो, 1,000 का शेयर बताओ, 10 रुपए वाला बताओ ना, 10 का 20 हो जाएगा.
Yeah.
That operating on stocks like that is not the way. What is the price you're paying for the company? They are buying that 10 rupees. The most traded share in India is Vodafone Idea because it's 6 rupees.
Yeah.
But people don't know what the debt in the company, they don't know the equity has ballooned beyond imagination. So I feel sad when I see this. I mean, the reason to do shows like this is think like a owner. You're buying the whole company. Would you buy the whole company at this price? If not, what are you doing there? Are you buying on greater fool theory that मैंने खरीद लिया कल सृष्टि ले लेगी 20% ऊपर? That can't be the basis.
Yeah.
Would you buy a company like that? But if you can't buy a company at the price you're buying, and then you really make wealth if you're sitting on 5, 10, 15 years on that company, right? Because that company will compound for you.
Yeah.
That's when serious money is made. Otherwise, every 3 months I buy and sell, buy and sell, buy and sell, and I pay my short-term capital gains tax. My end result is going to be nowhere. Another mentor of mine has been Durgesh Shah. He has a great line. He says, activity and achievement are not related.
True.
And a second thing I'll say since you're interviewing me, he's saying, don't mistake articulation for achievement. So the best investors are the silent ones who don't come on your show.
Yeah, they always decline.
Absolutely.
Some of the really great ones, they always just politely decline, saying that we don't want to be seen.
Because we know how many bullets we've taken, how many losses we have, and what all we've gone through to get to where we are. And what is the role of luck and patience and persistence in this as well.
How would you quantify the role of luck in your journey?
If we don't admit we are lucky, why were we born in this family? Why were we born in this country? Why were we born in this profession? Why did we have this kind of colleagues around us? I think we are giving us too much importance for our own success.
Yeah.
So
that's a beautiful way.
Let's think 99% luck, 1% but effort hona chahiye.
Yeah.
You have to be deserving of that luck.
Yeah.
So all you have to do in life is work with whatever you do. My dad taught me, even when you go to a bathroom, you must leave it as clean as you expect it to be when you go in. So everything you do it with perfection. And do it as if the next person will get the same as what you are getting. So even when you're selling a stock, you want the next person to make money. No, I don't want to sell it at the absolute top. Uski dua, uski bad dua lagegi mujhe.
But your mentality is very different from what we see otherwise fund managers do.
How do you mean?
In at least the private space, numbers don't change meaningfully, but the rounds keep happening, markups keep happening, and valuations get inflated on paper.
Yeah. But we don't do that. So
pre-IPO unlisted.
But we don't play that game.
Yeah, that's a very.
So we are buying. See, whenever we buy very few private companies, but when we are buying, first of all, why is this deal coming to us? Because we are not the top dollar payers.
Yeah.
Some fund will pay a lot more. So if they're coming for either I can help this company to think through what they're doing, or they're coming for my ecosystem, or I can help them hire from again people I know, then I am actually like a partner. And then it's worth devoting time And then I want to be like at least 20% of the company. Otherwise, why am I there?
Yeah.
So we are not doing these 60 lakh rupee bets across 500 companies. And then what you call spray and pray, that two of them will make up for 98 losses.
Yeah.
Because for us, our rule has been rule number one, don't lose money. So if you're buying on that basis, 2 or 3 won't do as well as we expect. 2 or 3 will do much better than we expect. 4, 5 will be average. But the venture way of investing is you don't know what will be successful. You just basically are fishing in the right lake. कि कुछ निकलेगा. Like say you'll do EVs today. You know EV भी निकलेगा. I will not do EVs today until I know BYD and Xiaomi has come out as the winner. Because before they come out, then I know.
Yeah.
And you can then load up at that time because its position sizing, the absolute money you make is much more there than by having 50 of these over here. So it's a different mindset, nothing right or wrong. It's just the way, I enjoy playing the game.
That's a great way to think about it and putting it as well. But, with the advent of so much technological disruption and the advent of AI, a lot of people feel that, you can't really hold on to companies for 10, 20, 30 years now because the world is so changing so quickly. So how does one think about that?
So, first of all, I do accept that the rate of change is very fast. And I myself am a proponent. I come and presented to a lot of my colleagues in the industry as well on technological change and disruption. And we do invest as a family overseas as well. So I'm completely cognizant of that. Having said that, there are companies which by their character tend to be a little more agile and forward looking. Like let's take fintech is a big change which is happening in the world. In question is in India, can the ICICIs and the HDFCs and even the SBIs embrace that technology and bring it inside, because now they already have the customer base and can they move? And at the same time, there may be a new age bank being created. Like at one level, there was Bajaj Finance, which we early, IDFC, for example, is doing a good job on that front. And then there would be a fintech, which has come out also, which I won't name as yet. But if you play this whole chain, eventually how this ecosystem evolves, I'm in the right place with the right players over here, and these will be industry and sector leaders. At another level, if the person is oblivious to the disruptive changes coming in their business, we won't participate even if the stocks do well. So I gave you examples. I did a program at Singularity, I think in 2016 or 17. And ever since then, I have not been able to buy auto stocks in India. They've all done well. But I know the EV revolution is coming. I don't want to be sitting in Maruti the day it goes from a 25p to maybe a 5p, because the earnings will collapse. We've had stocks, for example, like we saw this happening with Volkswagen abroad, trades on a 4p multiple. There are stocks in China, which were partners with BMW, trade on a 4p multiple. So the rate of change is very, very rapid when market loses confidence in the terminal value. Same way on pharmaceuticals as well. I have a view that the world will go a lot more towards genetics and biotech and away from chemistry-based pharma. India is largely playing in generic pharma, chemistry-based. I think that industry is ripe for disruption in the next 4-5 years. Terminal values will change. So I take the point absolutely, and we stay alive to that, which is why the reason we are looking and investing all over the world and learning all the time.
Any other industries that you think?
See, almost everything. In India, you take the brands, now the D2C brands can come and dislodge a lot of the erstwhile brands. The pharmaceuticals, I've already told you what's happening over there. Our original IT services business is ripe for disruption. I don't see how these valuations hold for them. Absolute number. Where they might scale down, reduce employees and morph into little more AI-enabled companies. But the fundamental character will change. Media has already changed irreversibly. Telecom also it's now a dumb pipe. It's what content you're putting through the pipe. Then eventually, can you do retail through it? Can you do financial through it? Can you put more media through it? That's the value of your pipe. And how many subscribers can you? So that game has changed. Fintech and financials we spoke about. Manufacturing with the advent of 3i, robotics. This whole advantage of I think in 4 years, I would expect my mom, she right now has 4 people as caregivers. I need one robot. And that robot can come at $25,000, which is what, $1,200 a year on a rental. 4 people are going to be unemployed. And they're not particularly doing a great job, and we have no choice to do. So manufacturing is disrupted. The only thing which may not be disrupted is actually the old industries. You still need the cement and you still need the copper to come out from the ground. You may bring it out more efficiently, but everything is a tech business. And people who think otherwise are fooling themselves. Because even in steel, What are the wealth creation that Sajjan Jindal did by bringing Corex technology? Steel is a 150-year-old business from Andrew Carnegie. He played the game right and he brought it.
Yeah.
And that made the fortune over there. So if the owner does not have a tech bent of mind in the business, you're going to be in trouble. You can be HDFC Bank and think I'm great, and you can be disrupted. So I think it's part of our checkbox when we are meeting people to figure out how they're thinking, how they think. Again, I'm going back to what is the character of this guy, and is he going to share rewards with the shareholders, or is it the empire builder who everything belongs to me? It tells you a lot.
What are other things on the checklist for you?
There are lots. I don't want to do that here, but see, I'm telling you, there's a basic trait of a person कि उसका पेट भरा हुआ है ना तो वो बदमाशी नहीं करता. उसी का पेट में कि मैं भी लूट लूँ कुछ. He's never going to be a good partner with you. Like a lot of PE deals, I was again, even in TPG days, you sign these long form legal agreements with the entrepreneur. The CEO can do what the hell he wants.
Yeah.
You're not there sitting, whatever board you put. I've been on boards where we don't know what the hell happened in the company.
Yeah.
What will you do? You are, the CEO is doing, the team is going to follow their instruction. The CFO is going to, probably support or may not even realize in many cases. The auditors coming, auditors looking, I'm getting fees from here, the auditor signing off. It comes to audit committee where the chair is actually looking at everything. Poor chap's coming 4 times a year. He'll spend 8 hours. How much more is he going to spend?
Yeah.
So you're not going and doing a forensic audit on every company. So to think I can sign a legal agreement and have a good business with a crook is never going to happen.
Yeah.
Like Buffett said it well, no? He said, look for some of the energy, integrity and passion.
Yeah.
And if he doesn't have integrity, don't bother about the other two. And that only, you have to, will this leopard change his, spots?
Yeah.
Hard. You can't make a good deal
And
with
you
a bad
can't know
person.
these things unless, you track them over a long
But you
period of
see
time.
it in you see
different
behavior. Like if you're very nice to me, and then you go out and you're talking very badly to the watchman or the liftman, it tells me something about
Yeah.
you. A good person is a good person. He's not looking, I have to be good with this person and bad with that person. I can afford to be bad there. So you pick it up. I can't. I mean, it's something you learn with
It
experience.
comes over time.
Yeah.
And you since we covered the founder aspect and builder aspect of changing with technological advancement, how do you think the investment business will change? Because there's so much algorithmic trading, quant investing, which is now gaining traction as well. How do you see the
It's
investment
changed
business?
already. So the
Yeah.
West is largely run by ETFs and algos. So in more predictable markets and more predictable economies, you'll find the quants taking over. And already the old renaissances and all have made returns better than Buffett even. The thing is, again, investing as a business, what gives you the right to make 2 and 20? What is so great? So it's really, like I said, an investment bank with a wallet attached. And it's become a marketing game in the investment management business. And it's a scale business. Like, for example, forget even equities. When mutual funds are selling debt products, do they really have the risk management teams and the credit assessment teams that banks have? Do you think banks are stupid to be having such large credit departments to go and assess what's going on? So the funds are getting the benefit of someone else's work today.
Yeah.
Same thing in equities. The screeners have become more powerful. In my day and age, to even get the balance sheet of the company was a big deal. Now I get everything pre-screened, ready with a forecast and everything ready to go, which means what's my edge? Either it is a time horizon, or it is some certain knowledge about the business, or my position sizing. I have no information advantage anymore. So if we don't evolve towards that world, and with AI now being much, much smarter in analysis than even you and me, I don't even have that analytical edge, I feel, anymore. So this business, as long as the trends are established, the quant will always beat you. Where you're finding the change and you're able to capture that change, that's where you'll win. And I think you should be humble enough to say at certain scale, like today, we scale back and think if we make 15% return a year on our base, we're very happy. It's still a very large number. There'll be youngsters listening and saying, what is this old uncle talking?
We 24%.
24% a week or a month. Like, what is this guy talking about?
Yeah.
But you will get to a scale where you should be looking more for permanence and longevity to build that
capital preservation more than.
And again, Buffett, he's absolute master. He says rule number 1, don't lose money.
Yeah.
Rule number 2, don't forget rule number 1. He says it eloquently, because if you're in an economy with a tailwind like the Americans had, if you don't lose money, over time you're bound to make money. Like I said here, if you don't make 15, 20 times in your next 20 years, even as an average person, you'll be unlucky.
Yeah.
So if you just don't do stupid things and don't get greedy, don't have FOMO, you will be up 15 times in the next 20 years. So just keep that faith, I guess, and keep going.
Amazing. I think last question before I let you
Yeah.
go. How do you think of legacy now? Now that you've had such an accomplished
I don't think about legacy.
You don't?
There is a
You've attained moksha?
no, it's not. Actually, before moksha in Jainism, there is the concept of arihant, which is where you're how do you call a bodiless soul, where you've
True
got
detachment.
you've got, and you're able to see things objectively. Your perception is not wrong. You're not deluded. You're not attached. That you can't even enjoy. Even enjoyment is nature of the spirit.
Yeah.
But also that, I can't give money away to someone, is also something is wrong with you. That's also a form of attachment, because it's like you are the wire through which the current is passing from the God
source,
or whatever we call to the world. In another place, I spoke about it as the river drop, the drop of rain which falls, becomes a puddle, becomes a rivulet, goes into the river, goes into the ocean. Your only choice, you're thinking, I want to go to Indian Ocean and not Arabian Sea, but actually you have no choice. You're going to land up in the ocean. Then ocean heats up, forms steam, and you go and become a cloud, and that's your cycle going on. So if you get that this is who I am, I'm just this drop. You can't think of legacy. Which does the sun think of a legacy and the raindrop think of a legacy? There's no legacy. You live a life. Yeah.
What a profound message to end
Sure.
the episode with. Thank you so much, Manish, for taking out the time. It was an absolute pleasure. I think the audience will benefit so much from your life, investing, and spiritual wisdom.
No.
We'll have lots.
Really blessed to be here, and I've had this opportunity.
Thank you.
Thank you.